Hello traders, Adhere Forex here, and welcome back to another episode of Forex Focus. Here we analyze the Forex market every single week. We do some top-down analysis on your favorite pairs, and yeah. So without further ado, let's get straight into today's video. Alright guys, so now quick note before we actually get started, right? In this video we're actually going to be using the supply and demand strategy to actually analyze the market, to do some top-down analysis. Now, if you actually check my previous video, what we used was the normal price, like the normal price action, the normal trend line, support and resistance, break of supports and resistance, and all of that, right? But in this video, we are going to be using the pure supply and demand. Some people might call it the ICT concept, right? Some people might call it because we're going to be using the order blocks and the imbalances and the fair value gaps and all of that. Yeah. So without further ado, let's get straight into the charts. All right. So this is DXY on the monthly time frame. As you can see here, we are currently sitting on a major support level, right? On a major support level. So let's just move on to the weekly time frame to see what we have there. At the end of this video, if you guys actually love this type of analysis, top-down analysis, than the one I did in the previous video, you guys should let me know the one you prefer, all right? So that I can keep making content, I can keep analyzing the market using the one you guys prefer, all right? So just let me know in the comment section, all right? So moving forward, this is the weekly time frame, and we had this order block, right? We have this order block on the weekly time frame. Now I do not count an order block that does not have the fair value gaps, right? Any other block that does not have a fair value gap, I do not count it as an order block, right? Now look at that. We have this fair value gap. You can also call it the imbalance, right? We have an imbalance around here, and the market is actually yet to mitigate it, right? The market is yet to mitigate it. So now let's just move into to the daily time frame. All right, so this is the daily time frame, right? As you can see here, right? As you can see here, we are breaking structures on the daily time frame. We broke structure right here. So we broke structure because we were actually in an uptrend, right? We kept going on in an uptrend, but then we created some sort of equal lows, and then the market actually, you can say it took out some liquidities, or fake out or anything. You can call it whatever you prefer. You can use any term of yours that suits you, right? So now we had this. The main thing is understanding the concept, right? That's the main thing. Now we had this break of market structure where we changed character, right? After breaking the structure, right? After breaking the structure from this was a higher high. Then it turned to a lower low. Why do we call it a lower low? Because the low is actually lower than the previous low, right? So it is a lower low, and then we have this high, right? What was the high called? It is a lower high, right? Now what we're expecting the market to do is basically, okay, yes, give us a lower low, and then a lower high, and then a lower low, to tap into this weekly order block, right? To tap into this weekly order block before probably rallying to the upside. Now guys, take note. Now on the daily time frame, we also have this order block right here. Why do I count it as an order block? Because we have this massive fair value gap. We have this massive fair value gap that is yet to be mitigated, right? This imbalance is yet to be mitigated, so it is still valid, right? It's still very much valid. We can actually see the market just tank like that, and what I'm going to be expecting from the market in the coming week is this. I'll be expecting a break of the structure, and then when the market retraces, I'll be looking for some sort of entries on my other pairs, on the pairs that I trade, right? So this is DXY, and all you should be expecting is a lower low, right? If the market can actually create a lower low, then we know that, okay, yes, we are in a downtrend at the moment, right? At the moment, do not forget, in the long term, we're actually in an uptrend on the DXY index. And also note, the market can actually, if the market breaks above here, then we can say we've actually changed character again, and then break of structure, and then we can actually start seeing a healthy candles towards the upside, right? So that's that for DXY. So now let's just start from the monthly time. It's going to be very swift. Now on the monthly time frame here, On the monthly time frame, we can see we have this fair value gap, we have this imbalance, right? And the market is here to mitigate it. Now, I was actually in the previous video, right? We talked about this area being a key area, right, on the chart, being a massive area now. But now we can actually, to be honest, we can actually see the market break out of this area, right? To be honest, like, we can see the market break out of here. But now, if we see the market break out of this area, a lot of people want to be buying the GBP USD. A lot of people want to be buying and buying and buying. But to be honest, what I see here is this: if we actually break up, the market might actually just want to mitigate this imbalance, right? Just mitigate it, and then, you know, probably consolidate a little bit and then touch this trend line before tanking massively. Guys, do not forget this: the higher time frame is what will tell us, is what's going to tell us what we should be expecting, right? And this is the monthly time frame, and we have this massive imbalance on the monthly time frame. So the market can actually, you know, break out of here and then tap into this, and this is actually, I think this is the third touch, if I'm wrong. Yeah, this is the third touch, right? We should be expecting, if the market actually creates the third touch, right, of the trend line, then we should be seeing now this trend line is actually just a confluence, right? So we could potentially see if the market comes up here, we should not be surprised, right? Now, on the weekly time frame, what do we have here? We have this imbalance. I'm just gonna be drawing out my levels, like, just draw them out just you know, if the market gets there, and I'll know that, okay, yes, this is the reason market actually came here. And you know, so let's just go to the daily time frame to actually analyze what we are expecting for the coming week. All right, so now on the daily time frame, what we see here is we actually broke multiple breaks of structures, right? Now the market actually, you know, created this sort of pattern, right? To the ICT concept traders, they call this the liquidity grab, right? They grabbed all the liquidity of the buyers, right? Now the market was creating this lows, and the people will be buying and buying. The market grabbed their liquidity, right? It grabbed all their liquidity, and then the breakout traders, right? The breakout traders, this is actually a sell to buy pattern, right? Created by banks and financial institutions, right? After the market took out all the liquidity of the buyers right here. Now we're going to now be seeing another people trying to sell the market. But then we had this massive rally. I have this 3 candles, right? They rally up. They took out the stop loss of the people that are trying to. They took out the stop loss of the breakout traders, right? Basically, that's the concept. I'm just trying to explain the concept. I'm not trying to rush things for you guys, right? To explain why this thing happened, right? At this rally, they took out the stop loss of all the breakout traders, right? Now, I'm not gonna go in details to to the explanation, right? But if you guys actually want me to make a separate video on how to identify market structures, how to trade demand and supply properly, how to use your order blocks and your fair value gaps the proper way, you guys should just let me know in the comment section. So if you guys actually show interest in learning, in knowing how to trade them, I'm actually going to make a separate video for those in the coming weeks, right? So now what do we have here? We had after this, you know, fake out and then on all of that, the market broke structure, and then, you know, black came back down here, broke structure. Now, but as we can see here, the market actually respected this previous order block, right? Let me just say the previous order block. I don't want to use the wrong terminology for things, so I'm not sure about the breaker block. I'm not sure if it's actually called the breaker block. So this previous order block was actually respected here, and then the market, you know, rallied. And all right, so what we should be expecting now is actually, you know, a break to the upside to continue the trend, right? So let's just go to the 4H to see what we've got there. Once we break this, you know, structure, we should be expecting, if you want to long the market, then there's an imbalance right here. Then you can actually just use this. You draw your level from this order block, right? From this order block, then you can actually, it depends on your strategy. It depends if you're a swing trader or day trader. you can actually you can go to the lower time frames and you definitely see same type of patterns on the lower time frame too. So that's that for the GBP/USD. What we're expecting for this week is a break, is a possible break. If we see a possible break to the upside, you can actually take your interest right there. And then if you actually see a break of this structure, right, then that is another story entirely, right? That's another story entirely. So let's just move on to let's see other pairs we can actually touch. So this is actually AUD/USD. Now if you guys actually watch my previous video, I talked about setting a sell limit right here, right? I talked about having my sell limit right here, trying to sell the market, waiting for the retracement, and then the market actually came back, and I actually got into a trade, and I was trying to swing it, and then my stop loss was I think above here, and the market came down all the way down, and then I broke even, and then the market came back up to take me out at break even. It was a crazy ass trade because I took the trade on I think on Monday or Tuesday, I'm not sure, but then the market took me out on Thursday. Man, being a swing trader is not an easy feat, right? It's not an easy feat, and we just have to accept it. So but then I took a day trade on I'm gonna go back to that later. I'm gonna talk about that. Now what do you see here? From the monthly time frame, we see that the market is actually respecting a key level, right? A key zone. Now this is there's an imbalance here, but the market has actually filled it. It has mitigated it, so the market can actually keep going down, because we had this bearish engulfing on the monthly time frame. Now let's go to the weekly time frame to see what we have here, right? Now I drew a trend line before, but I'm not going to use the trend line anymore since we are actually using the demand and supply strategy to analyze today's video. Now we had this imbalance right here, and I guess the market actually came to mitigate it, right? The market came to mitigate it, but I don't think it has actually mitigated it completely, right? Completely. So if we are going to be looking for buys at all, right, we should be looking for buys from this candle, because this is the order block. This is the order block, right? This is the order block. But now this is even the weekly time frame, so we can't take trades on the weekly time frames, obviously. All right. So on the daily time frame, we can see the market started creating some sort of lower highs range here, and then came down. Now we can say there's a change of character, right? I'm gonna say there's a change of character. Why do I say that? Look at this range. There was a range. This is a 3-day range, right? But then the market broke structure right here. The market broke structure again at this level. Now I count week as breaking of structure, because if the level is so strong, right, then it should not even have a week at all, right? The reason we had this rally up here is because of this imbalance, right? They came to mitigate their or it's actually like it's a concept, right, that like when you understand it, you truly understand why the market moves. Like you understand why the market moves this way. Now you have this order block right here, right? You can actually count it from your body or whatever, but I count my order blocks from the week, right? Now from the week, we see that okay, yes, the market almost tapped. It came to the tip of it right here, and then now it tapped into it really well. But now we can actually see the market coming down, right? That's what I'm expecting from this pair, to be honest. I expect the market to come down, except we break above, except let me just delete this, except we break this structure, right? Except we break this structure, we should be expecting the market to actually start tanking at this at this order block, right? But let's see the 4 hours time frame, and let's see what we have here. Now before we can actually say okay, yes, we're in a downtrend, we have to actually break structures, right? We have to break this. Number one, we need to break this 4 hour structure to change character, right? We need to break this 4 hour time frame to change character, right? So if we can once if in this coming week, if we see a break or a change of this character, if we see a break of this structure, right, if we see a break of this structure, then we can say okay, yes, we can actually start looking for, selling opportunities, right? I think that's that for AUD/USD. We can start looking for selling opportunities after we've seen a break of this market structure, right? It's all about market structure. Market structure is very, very key in analyzing. No matter what type of trader you are, I don't care. Support and resistance, SMC, smart ICT, DT, anything, any sort of the market structure is very, very key, and that everyone must use it. If you do not use market structures, then you are bound to fail in the long run, right? So let's just quickly take a look at GBPJPY. So guys, one more thing here. In the subsequent videos, they are not going to be this long, right? And the reason that this video is this long is because I'm actually analyzing from the beginning, like from the monthly time frame and all of that. The subsequent video, I'm only going to be going deeper, like just analyzing from the daily time frame to the weekly, from the daily time frame to the 4 hours to the 1 hour, and then to the 15 minutes. Like that is how I'm going to be making the videos henceforth. In the previous we've actually looked at, let's just not waste too much time. Let's just start from the daily time frame. To be honest, what do we have here now? The market guys, do not forget, in the previous videos I told you guys about the market breaking this trend line, and then this touch of trend line, and then the fourth multiple touches is actually here, and then we see the market came down. It tanked, like the market tanked, right? It tanked and tapped into this, oh sorry, I thought I was using my rectangle too, and tapped into this order block right here, right? It tapped into this order block, right? Now let's just go onto the 4 hours. So what we have, I actually took a trade here on Friday. It was really, really nice because I took just 2 trades this past week. The AUD/USD trade, which led to break even, and then this 1 to 5 hour trade on GJ. Now so what we have here on the 4 hours time frame, GJ is actually not really clear on the what's it called, like on the bigger time frame. At the moment GJ is just trying to do some crazy ass shit here. But if you look at this here, if you want to look at the market, just look at market structure. That's it. Look at market structure. What do we have here? We broke structure right here, right? What do we have here? We broke structure, right? And now if you actually come back to your daily time frame, you'd see that this is actually there was an order block right on the daily time frame, right? Let me show you guys on the daily time frame, right? There's an order block right here, and the market tapped into it, right? Yeah. So now you just need to, market structure is everything, right? Market structure is everything. So we tapped into the order block, and then what did we see? We had this massive bullish engulfing candle, and now we had another order block right here. The market created another order block. Just undo that. The market created another order block, right? And then guess what happens? The market is still at this, at this order block, trying to respect this, right? The market created another. There's a massive imbalance here that needs to be filled, and then it came down. And now what do we have here? Break of structure. This is also now break of structure, right? Now what actually made this, what led to this break of structure? It was this move, right? I'm not going to say this move, right? It was this move, but if you want to be conservative, you can actually say this move. You can actually use this high, right, to identify your break of structure, right? Once again, there's no holy grail in the market. You just have to use what works for you, right? Looking at this, right, we had this break of structure. We had this break of market structure, and then after this break of market structure, what do we have next? This level, right, is actually strong enough to break the previous highs, right? Don't worry guys, I'm going to make a separate video to explain the whole supply and demand strategy, the whole supply and demand concept, right? This level is strong enough to break above here. Now what we should be expecting now is a rally to break this structure, right? That's what we should be expecting normally, right? That's what we should be expecting normally. So that's what for this coming week, what we're expecting is this, right? But now actually let me just show you guys the trade I took on the 15 minute time frame. It was a really nice counter trend trade, right? So actually what I was actually expecting was this here. So basically we had this block of structure, right? And then we came like that. Let me just zoom in. Let me just zoom in to explain to you guys well. Now we had this break of structure on the 4 hours time frame, right? And then the market came up, created a very little imbalance right there, right? Created an imbalance right there. Now this break of structure is actually liquidity. It took our liquidity of buyers, right? It took our liquidity of buyers, right? Came right there and then rallied, and then came back at this order block. At this, now if I wanted to take this trade, I would have taken the trade like that, and then my SL will be below, right? Below this candle, or to be more conservative, below the lows, right? But then I was not chanced to take that trade, right? So now what I was expecting, now we had this bullish engulfing candle. Now for this bullish engulfing candle, what we're expecting now, I could have used this order block, right? But no, I did not use. I was actually looking at the order flow. Now order flows and order blocks, they serve the same purpose, right? Just that the order flow is like multiple candles before a bullish engulfing or a bearish engulfing, before an engulfing candle, right? But my order blocks or order flows, it must have fair value gap, right? They must have fair value gaps. And now what do we have? We have this fair value gap. Now I could have actually used this order block, but what if I missed my trade? So I was looking at this. Now this level is actually the I think the 4 hours level. Let me just delete that. I don't like my chart being too busy. So I was actually looking at this order block, right? So I was expecting the market to tap into this zone, right? I was expecting the market to tap into this zone for me, but then I knew the market would definitely come back here to tap into this zone. But then I was saying, okay, when is it gonna happen? So during the it was actually during the London session, right? I saw this break, right? And now this is a textbook example, right? This is a textbook example of trading order blocks or supply and demand, right? So the institutions, or the whatever that you call it, they were creating this range market. So for sellers, they will be selling at this level, and then for buyers, they will be buying at this level, right? Now they kept creating the range, and then what they wanted to do was they wanted to sell the market, right? Now for them to sell, they had to create this fake out, right, to take out the liquidity of all these sellers, right? They took out the liquidity of all these sellers, and then the breakout traders will be expecting to buy the market right here, right? But then what happened? Breakout traders went in, jumped in, the aggressive ones jumped in, and then the market tanked. It tanked, and then what did the market do? The market gave us this order block. It gave us this order block, right? After seeing this order block, I was like, okay, yes, I placed my sell limit. I was targeting here, right? But then I actually took 2 entries. I closed one entry around somewhere here, and then I closed the second one at 1 to 5. All right. So it was a clean setup. It was a clean trade, and So guys, this video is actually getting too long, but what we should be expecting on the GBP JPY, what we should be expecting is if we can actually tap into this zone, we should be seeing some rally to the upside, right? So guys, we've actually come to the end of today's video. So I know today's video is kind of not straightforward, but if you guys actually want me to go in depth on how to actually analyze the market, using the demand and supply strategy, just let me know in the comment section, and I'm gonna make a separate video for those, like how to identify market structures, a separate video for that, and then demand and supply, separate video for that. So guys, if you guys are actually interested in this sort of content, do well to smash the like button and subscribe, and do not forget to drop in the comment section any question. So that takes us to the end of today's video, and guys, do not forget, make sure you always stay to your plan, stick to your plan, stick to your trading plan, be patient with the market. The market will definitely give you your preferred entries, your preferred criterias, and then just stick to your plans. And yeah, so make sure you drink a lot of water, and see you guys in the next one. Peace out.